Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. Trying to get to what you need to know before you go, and that starts off with the economic data. Then we'll see how that impacts the overall markets. Talk about some option strategies we could implement into a portfolio based on the assumptions we come up with throughout all this. And, well, before you go, make sure you guys are smashing that like button for me. Feeds the bots. Listen, folks, you aren't limited to those, so smash away. All right. Let's get on with the economic data. We talked about unemployment claims in line with expectations. One of the things, though, that we did get yesterday was the CPI, Consumer Price Indexes, core, and the one that adds back in food and energy. Both those in line with expectations, but the year-over-year one is the one that we were all looking at, the one that really is the judge of inflation. We saw that inflation was going through the roof, 7.6%, highest number we've seen in 40 years, folks. The administration is really talking about weighted inflation and how everybody's making a little bit more money. That's up a little over 5%. Well, when you look at all of the other inflationary pressures going on right now, they're above that by well over 2% at this point. And that means that although it feels like you're making more money because you're looking at your paycheck and seeing a bigger number, well, you can't really have that spending power in the markets or in the environment or in the economy because those prices have superseded what your wage increase has had. Plus, on top of that, you've had that, you've seen that like immediately with gasoline prices going through the roof. So a lot of those things are what are causing a little bit of angst in the market because when we see these high prices, it is known that folks, you and I can't spend like we used to. We can't spend in all these different places because our money is being focused on either food and energy and not being able to be spent to other places of the economy. That is a sure sign that the market will start to slow. Something we'll see later on this afternoon is the University of Michigan consumer sentiment. That's going to be a good judge as to whether or not some of our how this inflation is really affecting the consumer here. And I think that we're going to start to see the consumer start to be a little bit concerned as they put all their money into food and energy right now. All right, so we can see bonds here coming off a little bit. Thought I was starting off with crude oil. So we got bonds coming off a little bit, not really surprising there. They got overdone to the upside. We know the Fed is going to raise interest rates. Bonds cannot be hanging out at 160 handle. That's just not going to work. Gold coming out of the 2000 mark here. I think a lot of folks have been waiting for this number for years and finally decided to jump on the first time they saw 2000 here. So that's why we briefly only lived in the 2000 handle for only a couple of days there as folks started realizing price and may not be in the markets all the time. They start hearing, hey, 2000 and gold, they go in and start looking to sell a little bit there. All right. So you don't have to buy these like buttons, folks. They're free. You can smash away at them. So make sure you hit that like button before you go. Bitcoin, we got the levers and pulleys here. We were expecting to see, or at least I was, to see gold and Bitcoin actually rise throughout this environment. We were seeing some weakness here. Some folks have been reaching out to me lately about Bitcoin, and I would say that Bitcoin, Ether are at levels that I would nibble at, something around 36,000 here in Bitcoin. We get a pullback down to that level. That is a nice support level that folks want to get involved. I would nibble there. Another place would be at 28,000. That's another place to maybe start nibbling. I don't know if we'll necessarily see that, but if we start breaking that level of 2,800, that's where the worry will really start to come in because it's going to look like we are test 20,000 then at that point. There's no real support other than that. So if you're getting involved in Bitcoin, if you wanted to get involved in Bitcoin, I would say that 36,000 is the level that maybe start nibbling away at, but I would not go full Monty and get involved in this right now. I would look to nibble there. We've got Dow Jones Industrial Average, and my stuff is all over the place here. Another nice move to the upside here in equities. One thing I would have over my back of my head here today, are they going to start selling into the close? You know, there's an unknown weekend coming, and folks don't really like to carry risk over the weekends like that. So we could see some weakness here. Maybe not so much in the Dow Jones as we'll see over here in the NASDAQ, because the NASDAQ being the tech sector, that's the one that is the most fragile at this point. It's had the biggest run. We talked about the corrections in these are going to happen more aggressively in things like the tech sector, and that's exactly what we've seen here. So a lot of rotation here out of tech into the blue chips. Folks, that's what I've been talking about going back to almost the beginning of the year here, is that we'd probably see start coming into 2022 this type of sector rotation, and that's exactly what is coming to fruition here. E-mini S&Ps, we already saw the breakdown there. We're getting a push to the upside. Again, I would be a little bit leery of this rally going into the day. Fridays, a lot of crazy stuff could happen over the weekend. Folks probably will not like to hold on to it. Having said that, I think that the trade of the day really is looking at covered calls on pops for things that are already in your portfolios, looking to sell puts on actual sell-offs here on stocks that you actually want to add to your portfolio. Going out there and do dollar cost averaging like most financial advisors will talk about on these pullbacks. They'll be calling you up and say, hey, it's a good price to buy Coca-Cola. Well, if it's a good price to buy Coca-Cola, why don't we just sell some puts there at a little bit better level, maybe a 10% correction from here even yet. And that way we can start adding at really good levels. And if we don't get down there, well, we get to keep that premium, just like it's a bit of a dividend, if you will, for being involved. All right. And that's about all I got for you guys. We were looking at Gilead here yesterday in the webinar. The last couple of days, I've been looking at this on setups, looking for opportunities. Well, we had low volatility. What do we look to do when we have volatility? I explain all that in Cracking the Code to Trading Options. I immediately streamline your process so that you are looking at the charts and you immediately know by looking at this chart and what I have right in front of us that prices are low in the options and I would want to buy them. Doesn't matter what my directional assumption is at this point. I just know that I would need to be buying options. And I show you how to easily spot that information in these webinars so that you're not constantly getting analysis paralysis. I can show you how to streamline that process. So check it out at Pro Trader Strategies. Make sure you're subscribing, folks. The subscribe button gives you the indication when I come in unannounced. So some of these videos, if you forgot about it, you'll get a heads up. All right. Have a great weekend. And if you can't do that, take it easy.